Okay, perfect. Perfect. Okay, so you can see the CFD trade. For those of you, as I said, this is the easiest, best thing to do if you're trading CFDs. It's an absolutely free trading applet that I made for you guys that you can get from this. It's Prop Trader Edge tools. Prop Trader Edge tools. Just go over here. Let me give you the link. It tells you all about what. Oh, you guys don't see it. Prop Trader Edge tools. It tells you all about everything that this applet does. It does a million things that you're going to be very, very thankful for when I give it to you. It's totally free. First of all you got to do is just simply have an account with Hola, but it allows you to buy, sell with an app, with a stop on a target preset. It allows you to have hotkeys set up. So if you hit the S key, it will automatically sell. If you hit the buy key, it will automatically buy. If you hit the R key, it will stop and reverse. You can modify. If you hit the X key, it will instantly get you out of a trade. All things that are super, super difficult to do on MT5 that are now just one key away. And it's, as I said, it's completely free. If you have a MT5 CFD account, all you got to do is just, if you already have an Hola account, you just simply take a screenshot of your purchase, put it in here, and it will take you directly to a free download. If you haven't done one, go buy it with our code PTEdge. And I think our code is Edge. With our code Edge, and buy it, and then you're free to go. So if you're trading CFDs where Hola really, really excels, it's a super cool tool. And I'll show it to you later today when Sam comes on. I have a lot. I have a lot of accounts. Yeah. So anyways, now we are going to take signals off our Hola Prime futures. Because Hola trades both futures and CFDs. So it's really, really cool. So we can trade them both. And we will take accounts there as they come. Matter of fact, we have like a sell scalp account here. So I'm going to see if I can get into the trade. Just missed me. Come on. I'm trying to get a good price on the fill here. Come on, baby. Sweet. All right, we're in the trade. I'm going to turn the music on. I'm going to let this trade on, and we're going to get a cup of coffee, and we'll start trading Hola for the rest of the time. All right, I'm back. Trade worked, nice and clean. We're basically back to the 500 level, right? It's the 550, 500 level. So far, the bounces have been just perfect. We've been bouncing off the 500, taking trades there, and then taking anything that shows weakness the other side to the downside. But this little churn is going to end one way or the other. I still think they're going to try to break the London lows, but we'll see. We'll see. Macro picture right now is where's my macro picture right now showing oil coming off the 85, 10-year still pretty much flat. Let's see what the market wrap has shown us. Actually, you know what I really love? I really love this version in Telegram. I love my Telegram version because this comes in at 7 o'clock and gives me a full summary of this one. Full summary of today's events. Let's see what it's showing today. I loved getting this like in my inbox. So chip route spreads globally. FOMC minutes due 2 p.m. Yes, that's the big event today. S&P Nasdaq drift marginally lower. 10-year yields slightly. W gains nearly 1%. Yes, correct. All good stuff. I mean, all true stuff. And Washington's prolonged blockade on Iran and tanker exports. Gold slips fractionally. U.S. round confidence was no ceasefire progress and let declines to resume talks. FOMC minutes from July 28th. 3 dissenters voted for 25 bip hike. Gave no right path. Market odds for September hike have slid to roughly 30%. Right. NVIDIA, Meta, Tesla all getting chopped. Beat 2 estimates before the bell, providing a modest early drift. Okay, that's all pretty good. Gives a really, isn't this a good summary? Just gives such a good summary of everything that's going on here. Euro dollar slightly up on the FX. If you guys are following FX, I certainly don't follow it anymore. So calendar, what do we have here? UK CPI came in essentially 2.9. So in line, FOMC minutes at 2 o'clock. These is lower estimates, blah, blah, blah. Yeah, nothing but the FOMC minutes. Everything else came in here. It also tells you, like if you're trading FX, tells you all the macro data, right? Over here in the thing. It's really good, right? Like it's a really full summary of the macro stuff comes into your Telegram channel right away. I really love it. But really nothing much new, you know. So I think it's going to depend a lot on whether investor sentiment cracks. If we kind of crack below this 29.5, because we did test it yesterday, came back up above it, but every rally has been weaker. Like it just hasn't reached higher highs. It's been reached lower highs. And I'm going to talk to Sam about this today because I'm wondering if we're starting to really go into that August NQ slide where we could eventually end up at 28,000 by the end of August as NASDAQ slides like 10%. So I'll be interested to see what Sam has to say when he comes in a little bit later today. Who's new in the room here? Who wants me to, while it's kind of quiet, wants me to explain the basic meaning behind the signals or the symbols on the chart and what they're telling me as I trade? Give me a +1. Let me know. Mark, you're not new. You've been around forever here. No, I only want new people who've never been in the room. All the people I see, there's familiar handles. Nice, I will tell you, but great again. Okay, you're new. Where are you from, my friend? Who else is new? Who wants to know the secret sauce here? Coming into London lows, by the way, guys, as I kind of thought. I think we're going to test that 29.5. I'm watching this pretty carefully here. Malaysia, wow, nice. Wow. Is Malaysia the one that has like a million? No, Malaysia is not the one that has it's Indonesia that has the 10,000 islands, right? And Malaysia is next to Singapore. We have a short signal here. Short signal near London lows. Legit trade. We're going to try and take it. We're going to try and take it here. 35 seconds left. We're going to wait for it. So these double triangles is a scalp trade. If the triangle is neon red, that's a high confidence scalp trade. But you know what's happening here is we're getting these contrary signals. No, we're actually not. Wow. It's interesting. Like for a second, we had a bounce signal as well as a scalp signal. Sometimes we get both of those signals at the same time. But now I'm just going to sell this. Legit scalp sell signal. Let's see if it works. Again, this is the market testing the 29.5 level, and the buyers try to pump it off the 29.5. The sellers brought it back down with the sell signal, but we're clearly getting next to Singapore and Thailand. Yes, exactly. Well aware. So we're getting effectively kind of contradictory signals, which occasionally occurs, especially in a low volatility environment. This was a high confidence sell signal, immediately reversed by a possible buy bounce reversal. And we have to decide which one we want to trust more. Now we actually want to I'm going to wait. If this holds, it's probably worth it for us to reverse ourselves. Very whipsaw action right here. All right, I'm going to reverse myself the other way, just to see if this, because they seem to be stubbornly holding this 29.5. So the fact that they kind of were to reverse it tells me that I probably want to be on the other side of this. But this is a kind of two-way price action that can easily whipsaw around the lot, which is why we trade very small. And you have to be fully prepared to accept the fact that you can get a whipsaw, short signal, long signal. Both of them don't complete, and you kind of change your mind for nothing. That happens occasionally. You have to trade small, or you can just simply stand aside. I'm just, I'm taking the trades here with you guys because I want to take every legitimate signal I can. But you could, when you get that kind of a up down, bipolar structure, you could just stand back. This was a clean signal to the sell side. There was no greens in between, right? You just stayed there. You stayed patiently until the trade resolved. Those are the trades that are perfect. But you will get these seesaw trades, of course, and you have to just accept that that's going to happen, part of the trade. I took it out quickly because it started to wane. because I didn't want to get seesawed the other way around, which is exactly what happened here. So short trade, long trade, now finally breaking the lows here. So if this stays negative, I'm gonna sell this. I'm gonna take the directional cue from this short side, but I'm waiting for the candle to close before I commit to the short side. I want to see it hold that diamond. The diamond tells me it's a volatility breakdown. See, it goes away. And that's why you wait for the candle to close. Nobody has the dominance right now, and until somebody shows me some dominance, I don't want to follow them or control. So there are, for those of you guys who are new to the room, just want to let you know, first of all, if you're new to the room and you want the full free giveaway for the strategy, here's the URL. Just click that and you'll get the full PDF of the strategy. So you can see all of the potential trades that are inside this indicator. But the two primary trades that we do here is scalp trades, and scalp trades are divided into high confidence, low confidence trades. So a neon green triangle, scalp trades are demarcated by double triangles. That sort of tells you that speed. This is a scalp trade. Neon red or neon green is high confidence trade. So high confidence short, high confidence long over here. That we've had over the last few trades. The plain green and light pink trades are lower confidence scalp trades. So those are directional scalp trades that we do. And we're generally doing them with 8 target 20 stop, which is a 1 to 2.5 risk reward ratio, or 71% break even. But the proper way of doing it is to actually use the ATR value. But we'll save that for coaching. And then the other type of trades that we like to do is the diamond trades. Diamond trades are volatility breakouts or volatility breakdowns. And those are most effective around level sessions. So if we get a breakdown, breakout, that would be a reversal off London lows and want to get long. If we get a red, just a few minutes ago, I had this red diamond that looked like it was accelerating into the London low, and that was going to be a London low break, and I was going to sell that. But it didn't materialize. So the reason these volatility candles are constructed based upon ATR as well. What it basically says is, in this particular case, this was so much selling that it broke the average ATR. It was bigger than the average ATR. That means the sellers were dominant here, and therefore that gave us a clue that there's going to be more selling to come, right? It's kind of like super strong wave. It's going to have aftershocks, and we're going to trade the aftershocks. Do the diamond indicators more weight and chance of probability? Sorry, Jason, are you asking me, is it better to trade them on a reversal basis rather than a continuation basis? Is that the question? Yes, and the answer is yes. They are better to trade on a reversal base than continuation base. Hey, Shob, Shoba, what is this point? Max profit USD 25K count, one trade apex. What does that mean? Mark, yes, you can use the 15-minute time frame. Obviously, like the longer time frame that you use, it's going to be very few trades with much larger stops and targets, because everything expands on it. The ATRs are going to expand. What is again? I understand nothing of what you're typing. what is your point about Apex? Yeah, when you get two signals at the same time, it's a confusion. You have to or you get two opposite signals, one candle apart. There's confusion in the marketplace, right? The market is not in consensus of where it wants to go. So that's where the dilemma becomes, right? This is where I had the dilemma. I went short, then I went long, took my quick profits because it wasn't expanding, and then stayed flat because there was no continuation. So like right now, it's clear the market is struggling with trying to find a consensus, and maybe now I was just going to say maybe it's going to find it just missed the diamond trade, off the bottom of London low. I'm going to take it just for shits and giggles in this particular case, on the assumption that it looks not a signal, but a look that the buyers want to take the bounce again, that they're willing to hold the level just for now. So I'm sort of front running that signal. Let's see if I'm right. Sorry, one single trade. Okay, yes, one single trade, but I don't understand what anything else you're saying after that. What is actually the point you're trying to make? Good morning, everybody. Good morning. Good morning. We are trading for our friends Hola for the New York session. Our friend Sam Saleh is going to come in. We're going to talk to him. We're going to discuss the general state of the market, and then see what is this. Yeah, this is a fractal indicator, right? So like, just to show you, you want to see this on a 15-minute chart. It's going to be, fewer signals. This is a 15-minute chart, right? So, yeah, I'll change accounts so that we're not distracted. But this is a 15-minute chart, right? And you can see that on a 15-minute chart, first of all, the ATR is in the 40s, much larger stop spots or much larger targets. But it doesn't, prevent you from seeing possibilities. Here's a Tokyo low bounce, right? It bounces off the Tokyo low, green diamond, right? And this is again that one of those two-way contradictory signals that resolve to the upside. So you have a short, long. Whenever I have triangles against diamonds, I always take diamonds because diamonds is a stronger signal, and then the diamond is confirmed by a green arrow. So boom, you can get long here. Your stop is going to be like 40 or 80 with a 40 target. And then, you have a much larger, the move here was from 488 to 631. It was a 150 point move on a much longer time frame. So yes, you have like three signals here, but the signals themselves are much more meaningful or much bigger. By the way, that little scalp that we did that I showed you, where is this? That trade worked. Just want to show you that trade worked, right? You can see that on the 1 minute chart. So I took it over here. I sort of front run the bounce because it looked like it was, it gave us the green diamond. It just disappeared, and then I took the long. And that's the really cool thing about the indicator. The indicator, even if it doesn't quite give you the signal, really gives you the nudge in the direction. Remember that all you're trying to be is on the right side of the market, right? And that's what we're doing. AZ is asking, when you say you trade small, you mean contract only, never DCA or smaller stop loss and profit target? So one, never dollar cost average, never increase my size. Yes, I trade small. I rotate my accounts and I hold my stops and targets. So the only difference is I will never expand my stop. I will sometimes contract it, or sometimes I'll just get out before my stop hits. If I feel the trade isn't developing the way I want it to, or if I feel like I did not execute the trade properly, right? So I will take my stop or less always, and occasionally I will take my take profit or less. So in other words, I'll take a little bit less or take profit. So I'll take a small take profit, but I try to do that very rarely. But that is all I do. Yes. If you do that, that puts you in a much stronger fiscal and then I think mental shape by doing it this way. Does that make sense, AZ? Do you understand what I'm saying? Give me a +1 if you understand what I'm saying. 29,500 holds for the 4th time today, my friends. Man, that is a like an MMA fighter that refuses to die. Yes, I trade NQ. Yes, not that we can't trade anything else. We can trade gold. We will try to trade gold a little bit later today, maybe with Sam, and certainly tonight when I trade tonight for Ola, I trade gold. But generally, the reason I trade one product only is because we trade on very small time scales. We need to time our trades, and we need our focus. You can see I already lose my focus all the time. You need our focus directly on one product, one shot, one kill, one punch. No. Mark, good for you. Gloria hits another 15. Good job for you, Gloria. Gloria, are you practicing my rotation technique? Just curious if you're doing it, and if you are, share your experience. I'd love to know how it's working out for you. Mark, the longer time frame is embedded in my indicator through here. This is a longer time frame filter, which tells me neon or not neon, right? So whenever I have neon, it's the higher time frame filter that's giving me confidence of the sells or shorts. So it's already embedded in my structure. Oh, here we go. We just reversed ourselves big time off the VWAP. So we got to take that trade. Let's see. Is there any news on any news that any news happened? It doesn't look like it's news. It looks like just bullshit reversal. But let's see if we got headlines. No headlines. Nope. Ooh. Okay, now we got to go the other way. This is there's something going on here. I'm probably not seeing the news, but if you get a red diamond, green diamond, if this stays, too bad. I was like getting all excited. If this stays green, we got to go the other way, because this kind of volatility up, volatility down almost always creates extension moves the other way. So hang on, I'm waiting patiently. I'm going to wait patiently for this trade to hold. I want to make sure the diamond stays in place, and I'm going to go long this diamond. This is an off-menu trade that we see very rarely, maybe once or twice a session. Oh, look at this. It really, really jumped. Holy shit. Something has gone on. Yeah. I wish I'd come in a little bit earlier. All right, let's see if we can get this done. When you have that dynamic, come on. There we go. I'm going to take this off. All right. What happened here? Why is this not getting me done? Oh, I got done. Okay, we got done. It it was a delay in the execution. So when you get that dynamic, right? Why does this trade? Why do I love this trade so much? You have a volatility move down, immediately reversed by volatility move up, or conversely, up reversed by down. That means everybody who was convinced that they were right is immediately wrong, and they have to cover, right? They have to cover. So you follow the direction of which forces it's like, it's like jiu-jitsu, right? You think you're going to make the move, and then you wind up falling flat on your face. So I want to go with where the force is, and the maximum force of pain is to the upside in this case. Well, just like when you go the other way, maximum force of pain is to the downside. So, you know, it looks like it's some kind of. I'm trying to see if it's a news reaction or not. Do we have? I don't see any red tags. Nothing clear here. We do have a buy, a neon green buy, so I'm going to be buying this right now. And see if I can get that done. So we sort of broke down below and then recaptured VWAP, which is interesting. I don't know if it's if it has any meaning beyond that, but they did recapture the level. Let's see if they want to hold. The BK bundle gets you Kathy's zip indicator as well. Wow, look at this! Look at this two-way vol. I'm going to exit and sell. Wow, man, this a lot of. Okay, let me just organize myself here on the structure. Blend myself in. Wow, there's a lot of chop action and not really anything off of. I don't think I see any news, so we could just be getting whipped out of positions, which happens. Let's see if this one resolves. I scalp. We scalp. We actually do both. We scalp and do day trading. When we have session level session trades like London lows, New York highs, New York lows, we try to make a little bit of day trades there. But generally, we're scalping scalping signals here every 5-10 minutes. Right now, we are just in this very, very choppy two-way market where we're getting both buy and sell signals at the same time. So it's very destabilizing. Basically, we went long here, went short here, long here, lost money on the short, made money on the long, went long here, stopped myself out because of the reversal short here, and staying short here, hoping that the short works, but it may just bounce back against us. It's just this is just chop territory, and I'm taking many signals here just to show you the possibility, but I don't think necessarily that I'd be taking them if I was running the my fund accounts. Yeah, we totally. So again, we recover now. The consensus really goes to the upside, and if I have now I just got to go. Now I just have to go buy. I'm going to trust that we finally resolved ourselves to the upside on this move. The stop is going to be like right underneath here, all these session lows. Let's see if we can get some more movement over here. Just give myself. Usually, when I'm going to do like kind of a positional trade, it's going to be short target, long target type of structure. But this looks like the market kind of resolved itself above the VWAP. So let's see if we can get a short target and a longer target move here. Yeah, I hope it goes to 29.6. We'll see if we can get the power move to the upside. This 8 o'clock hour, generally, New York Core comes on, and um, that's when we start to get some some more market movement. Now, if I'm trading this like in a day trading fashion, right? We recovered the VWAP. I'm basically trading the VWAP recovery. The really proper way of doing this is from session to session. So if I really want to avoid noise stops, I have to be underneath here. I have to be underneath the last key session support, which is the prior day Globex lows, like right around here. So sort of give myself all this room to let the trade run. Because this is going to be a longer type of position than just a couple of minutes on the resolve. On the other hand, we can switch around to the other account. We can just make one account. This is the cool thing about here with Tradingview. We can make one account scalp only, the other one directional. So this one on the scalp only. Let me just change this around here. Gives us a scalp signal to the upside, and it's a neon green scalp signal, high confidence scalp signal. Let's see if that works to the upside here. Jason, yeah, the bundle is always better because you can then enjoy Kathy's signals as well. But I leave it to you at how you want to do this. Long 45, and I'm at 53. So this is the scalp trade, and you see the scalp trade gets done. High confidence scalp trade, nicely done. Now we can go back to the other account just to kind of watch it. Again, this is a positional trade, so it's a much longer trade, giving ourselves much more time to see if we can develop this with a short target and a long target. The cool thing is, with all accounts, I can really show you the bigger trade structures because I'm not trading them, the way we did with Apex, super tight. No, Sam is coming in to hang out with me. Kathy doesn't trade live. Sam is very much a scalper, just like me. So it's just going to be interesting to see because he trades volume. So it's going to be interesting to get his insight on volume and just a general market view of where he thinks the market is. Good morning, guys. Good morning. 8 o'clock in the morning. No news really today. It's FOMC minutes day. It's about the only thing that's on the calendar. Markets are a little lackluster, but surprisingly resilient around the 500 level. 3 or 4 times tested and bounced. And we traded those bounces pretty much all the way from London to New York. Did I think about 7 out of 8, maybe 7 out of 8, I think, on the scalps. Then we switched over to these Ola accounts, just started trading those. We're at like 2-1 on the scalps, 2 wins, 1 loss, and now just trading this positional bounce. This positional trade is essentially based upon the idea that we broke above VWAP, holding the VWAP region, and the next, the stop for us will be the next natural level, which is the prior day Globex low, and we're trying to trade this to short target and long target on a more positional basis. Yeah, Kathy trades Forex only, right? So although she started to trade, I think NQ a little bit now. She's got a couple of like NQ ideas that she likes to trade, but generally she's a Forex only trader. She trades on the 1 hour chart, so she does not scalp at all. She is a much more of a positional trader. It's a very different experience trading with her than it is with me. People really like that. They like the contrast. Getting a second green diamond, kind of holding the view up again, but very clearly, as they say in the South of America, lots of heat, little light. Now, lots of movement, but little direction. What's my favorite trading book, other than Wizards? The one that everybody talks about. I think the one that everybody who is who's been trading for a while, like, I almost feel like you have to say this is your favorite book, but it really is, and it's Mark Douglas. Let me pull this up for you. Douglas, Trading in the Zone. Trading in the Zone. It's such a good book because it really expresses sort of all the key, all the key psychological flaws that all of us fall through. It's just, it really is the Bible of. It's got nothing to do with strategies, but it's really like the most important book as far as just creating a mental model of market. Which the bottom line is, the most important thing in Mark's books is that at any given time, everything that you think can happen can be the exact opposite. Like, in other words, there is no guarantee, there is no certainty, and there's never ever a possibility that the market can't go completely crazy on you. Another scalp signal over here. So I'm waiting for it to. I'm just changed accounts. I'm going to try and buy this. See if I get in there. Okay, I'm in for another scalp to the long side. So we're going to do a little bit of scalps, and then I'll update you on the positional trade, which we're still holding positionally on the move here. Go read SO Bandit. Can you give me the full title? We'll be happy to. I'm happy to look it up. What's the book? SO Bandit. Let's see if I can find it. Bandit book. Nope. I guess whatever title you gave me is not the one. What's the name of the book? Yeah, Thinking Bets also. I don't love her book. Maybe it's because I don't like her a lot. So I'm biased, but I don't really love her book. But principally, she's correct, Annie Duke. One of the best books, just purely, yeah. So WFO, give me the correct title, man. Otherwise, we can't. So Spanded. Oh, So Spanded. So Spanded, the book? Yeah, my God. Jesus. How old are you? Speaking of old, I'm going to give you a book title that I really, really like. So Spanded. Is there any book about this? Secrets of So Spanded. Harvey Huck. Oh, my God. How old are you? Holy shit. Harvey Huck. We're starting to move, guys. So the scalp trade worked, obviously, and now let's go. Oh shit! All the trades are working. Wow, wow, wow! So all the trades are working. I took the we took the what do you call it? Positional trade over here. Where's my positional trade? Wow, this really recovered nicely, right? Great. Wait, hold on a second. Hold on. Which account am I in? 160? That's correct. Okay. So we're in the correct account. So we took the positional trade over here. We held the stop, below the prior day low right over here. There was a short target here and a long target. It actually, both of them got hit in the same candle. That's how big a move it was. So both short target and long target got hit. See, we sold one at 72, one at 62, just a complete sweep. And the entry here was around 54, right? We took the entry at 54, at 50. So we came in at 54, 57. One got sold one at 62, one sold one at 72. So that was the positional trade that worked out very nicely for everybody. And then the scalp trades all worked very well on the scalp account. So here's the scalp account. This is us doing the scalp trade here, just catching the scalp trades. So all of that worked out. All of that worked out nicely. Oh my God, so Spanded, Harvey Hookman. This is like literally going back to my youth. This is 1990s. Very, very early stuff. And it was interesting because I actually it'd be fascinating to read this because obviously technology has completely outgrown this guy. But it'd be interesting to see if you and there's no way you could practice what these guys did because algorithms completely destroy your edge. But there may be a way to modify their approach. In a way, you could make the argument that I do what these guys do now, just simply on a longer term time frame, to avoid the algorithms against me. But yeah, it's probably an interesting book. But the book that is really great reading, really really great reading on Amazon is Pitbull by Marty Schwartz. What is this? Why is this coming up? Oh, Pitbull. It's Pitbull. No. Oh, here it is. Marty Schwartz, Pitbull, who was like probably the first retail day trader in 1980s. Just amazing guy. Super interesting. It recounts his whole story from beginning to end. Just first of all, a greatly entertaining read, but a lot of interesting insights in there as well. Just really, really worth reading. Great guy, great book. So if you just want a pure, clean book for entertainment, that's the book that I would recommend for you guys to get. We have a scalp signal here, but not a high confidence one, so I'm going to pass up on it. You're a 70 baby. So am I, my friend. Jesus. I actually now you sort of, you got me curious. Now I'm going to definitely download the Audible and just listen to it because I bet you there is some interesting kernels of insight that we can get. By the way, I'm going to sell this. Which account am I in? 61, sell. So I'm taking the short here. This is a sort of a low confidence long contravened by a short signal. Let's see if I'm right, or if I'm going to get a little bit of whipsawed over here. We had a big upside move here, but stall on the move. Actually, I probably, you know what I'm doing? I'm probably wrong because we already slid from 56 to, yeah. Let's see. We'll see. Let's see if I want to take this scalp here. Come back here. All right, I'm just going to see if I can get a short exit on this thing. Again, I'm a little bit late on execution because I'm yapping, but the principal idea behind the trade is low confidence long followed by a reversal short signal. Take the reversal short. Again, same idea as, green diamond, red diamond. Take the flip, trade the flip. Usually the flip works. It actually would have worked here, but again, I executed myself poorly because I came in late. This is the candle I should have come in on, and I did not trade that well. So now I'm just trying to see if I could nurse a win out of this thing. Time is it? 8:24. Okay, cool. No calendar events today, so sort of a quiet day. We're just trading until the open. So let me just show you a cleaner view for those who are trading positioning. Again, the money is in the position trades, right? The scalps are for fun, but the money are in the positional trades. So if I choose the positional trade view, just kind of walk you through the whole thing. All right. What you see here on a narrative basis is here we are challenging the VWAP, right? Challenging the VWAP. Oh, and then now we find that my scalp trade worked very nicely. I reversed my chart. So we're challenging the VWAP, right? So like, if you want to look at positional trades only in a very super clean view and don't get the scalp trade pollution, you just simply choose the session level view. You go into dots, you go into day trading, but you choose the session level view. And this gives you far fewer signals, but these signals are much more meaningful in the sense that they have much bigger profit potential, and frankly, most of the time, probably a higher accuracy potential. So the difference between a level rejected and a level confirmed is if you run to a level and you get a like here. Now here's a level rejected. You run to a level to VWAP and you get a reversal signal like a red diamond. In this case, this fails. But this will be a legitimate short here. You basically claiming that the VWAP is going to fail and you're going to get short. So boom, it gets failed. When you try to trade level confirmed, meaning that you want to go with the level, the touch of the level is not enough. What you need is a double confirmation. So in this case, you have a green diamond that pierces the VWAP, and then the much more important green diamond that trades above the VWAP. It's telling you the buyers have hold the price above VWAP, and they've held it so much that they're willing to take a volatility long. So when that happened, that's when I went in the 60 account, I believe. If you look at the 60 account, you can actually see this much better in the 60 account. So you see, this is where I go long, right? I sort of get short, I reverse myself, I go long with a two exit structure, short, long, because this thing was so powerful. It took out both the short and the long in the same candle. But that is the trade that you want to do. And right now, they're continuing to hold the VWAP, right? It's still very, very positive above. We don't necessarily have a trade here, but the whole idea of how you trade with the levels or against the levels is the question of confirmation. So you can really see that very clearly in the trade that we made here. We held, confirmed the VWAP, and then it took about 10, 15 minutes, and then we resolved it. That's a classic positional trade with our indicator that can trade over and over and over again, as a trade confirm level. Let me know if that makes sense. If you have any questions on that, happy to discuss this more with you. But basically, that's how it plays out. Clear? We can also, by the way, just look at scalp conditions, right? So since we're nowhere near levels, it's probably like the way we should be just looking at this. If we're not touching any levels, the only trade to be made is the scalp trade, right? So there's no levels in the immediate vicinity. If you look at, oh, you know what it is? Shit, I just realized this. Okay, so I don't have the levels on here. That sucks. Yeah, that's the problem. Okay. Hang on. Yeah, it's just in this particular view, if you're doing the scalping, you won't see the levels. But you know what? You could, I could create a custom view for us, but I don't want to bother with this. If I go to both, level is 609 and the other level is 14. So you can kind of remember that and then just simply go scalp. For those of you who are like on the advanced aspect of this indicator and want to create kind of a super advanced view. By the way, total reversal view, right? What's my scalping? Oh, this is my scalping. I'm in my scalping structure. 161. Selling this. Total sell. Why am I selling this? It's a low probability long reversed with a short signal. So let's see if that works for us. So this is a pretty decent looking scalp here against a low probability long. And it's low probability because it's not neon, right? It's not neon, it's just green. So it reversed itself, and I want to take that reversal. There we go. And the reversal got done, right? So that's pretty good. We're actually 4 for 4 on the scalps here, just purely scalping out. So if you want to see levels, it's not that it's important for us to see levels now, but if you want to see levels along with scalps, this is a very advanced way of configuring it, but I'll show it to you guys in case for those of you who are interested. So if you're just looking at scalp signals, no session level signals, no diamonds, just triangles, but you still want to be aware of the levels, what you do is you're going to choose custom. You make your own titles, right? And within that, you're going to just, because in a custom, everything is shown, you're going to just delete what you don't want. You're going to take R labels off. You're going to take dots off. You're going to take the ATRs off. And I think session levels are there. So yeah, and just, wait, why do I have triangles? ATR breakouts. You're going to take those off. So you kind of just delete everything, and now you're just looking at session levels and scalps. By the way, scalp to the upside by high probability. Oh, look how fast that was. That's a high probability scalp, right? Neon green triangles, boom, happy to take it, right? Take turn bullish. So I made that. So we're actually really good on scalps today. We're like 1, 2, 3, 4, 5, 6, 6 positive scalps, just purely scalping. You guys having fun? So this is a custom view that you could create just for pure scalping with sessions as context. Now we're going into Tokyo highs. So the view that you really want, if you're, is a session view now. So I'm going to just change myself to day trading views, session level views over here. And here's the problem though, because I made a custom, it overrode it. So now I have to click all this stuff back on. This sucks. Okay. So you have to manually do this. So this is where we get into the session level views, which is interesting. Let's go. This is our session account, the 160, and what's happening here is that we're breaking above Tokyo high, London high. So we're clearly having a nice rally. That 500 level really held, as we saw earlier in the day, right? I mean, the cool thing about scalping with me every single day is you literally see in real time, absolutely see in real time how the narrative progresses, how you hold the level, you consolidate, you run the fresh levels, right? We do this over and over again. And the only way I could convince you is just by you guys either watching this on replay or watching with me, and how in real time all this shit develops exactly as I show it to you, right? Like there was no doubt. We saw the London lows hold. We saw the market consolidate. This is just sort of like the thing that I hope you guys, by the way, rejection of the Tokyo highs, right? So we're going to just sell this. See, red diamond, Tokyo highs get rejected. Let's see if this is going to be tradable. We are in the, I got to go in the 160 account. This is our session account. We're going to wait to make sure that this candle is real. It doesn't, it goes away. See, I had a feeling it might go away. So no signal. No trade. But what I was going to say is, you don't need to believe me. I show it to you every day at how session levels create narratives. And the other point I was going to say is you see every day how price action is not random, right? It is not just, like a drunkard. Today, right now, I'm going to go up. The next minute, I'm going to go down. The next minute, I'm going to go down. There is a methodical process here as participants react and contract against levels, right? You can literally see that. Now we are trading above Tokyo highs, challenging London highs, and now we're having a much stronger, bigger bullish session than we see. But you guys see how level to level the market develops its own narrative. So now we're above Tokyo highs. Now this becomes a legitimate day trade as they're trying to challenge, the full move to the upside. And now sort of, we want to be long this thing against the lows of the Tokyo highs, and probably oh, Jesus. Ugh, I got too fast. I couldn't move I got filled on my target. So effectively, I'm going to count this as a short target. And I'm going to count to see if I can get more of an extension here into the prior day's lows. So I want to be underneath Tokyo highs here. Positioning. I I was using my scalp setting because I don't change my settings, and literally my the +8 got done in 1 second. So I didn't even have a chance to move my target higher. So I'm going to count that as a short target made. And I'm going to try to see if I can get a longer target here on a positional basis. But we're basically, through the key levels and trying to run the prior day's trading high. Yeah, the 29,600 is coming. Not the 600, actually, the 700, right? Actually, the 700. We're through the 600. You were talking about 600, but it was actually we're through the 700 coming through. Because I remember you said that when I was trading over here, you said it could expand all the way to 600 when we were in the 500s. It ran through the 600s, and now it's running towards the 700s. $668 is the session high right now that I'm looking at. Let's see if we can run the 668s. That is the London high. Now, you know what? I'm going to take this out. Usually, I want to be patient with it, but if it rejects here at around London high, I'll take the rejection as a trade. I think it might be a better rejection trade than a continuation trade. The continuation trade was here. We took that continuation trade and expanded. Let's see if it gives me a rejection trade. Are you on the CFD side? Oh yeah, that's why you had the different readings. Oh. 840. We're getting about an hour away from the New York Open. Let's see what Sam wants to do. Yeah. It depends on which broker also, because every CFD value is different. Because every broker, those of you guys, by the way, who want to understand why are CFD values different from futures values, because brokerage who do CFDs, they do like a 3-month blend. So this is the front month futures contract. This is the September contract. But what they do is they take September price, December price, and even March price. They do 3-month forward, and they blend those prices to get kind of a general CFD price. So that's why you have the differential in values. In the greater scheme of things, it doesn't matter because it's a 1-for-1 movement on a short-term basis, right? It's just simply, if it moves 10 points from 700 to 710, it's going to move 10 points from 600 to 610. So we're stalling here. This is where it gets interesting. We're stalling in front of London highs. If I get a red diamond, I definitely want to go short. I want to go short here on the assumption that the level failed, right? Good morning, everybody. We're chilling and grilling here with NQ. We had a whole series of positive scalp trades, and now we're just trying to look at a little bit of positional trades with the diamonds, just to keep the two views clean and clear. Markets challenging London highs, and prior days trading highs around the 29,700. I'm trying to see if we blow through these levels or we reject them. So I'm just being patient here on the trade. I can also just simply create a second view for us for the scalpers, just to trade the scalping structure. A couple of high probability scalps. We didn't take those, but we took all the other accounts. Through the price through the 29.7. There we go. There we go. Maxi B calling it out. Nice job. Nice job. We're really picking up strong bullish vibe here. Okay. Good. Sam is going to come in soon. So I gave it up too early. I had the right structure here, and I was like, oh, it looks like it's stalling. I should have been patient because we ran all the way up, right? But you can see on the indicator how well it traded. I kind of got a little faked out by this red move. I thought we get a red diamond. We didn't. And all the more reason, by the way, why the indicator works so well, because you did not get any false sells, right? The indicator kept you in the trade if you just sort of trusted the process. Let's see where I'm just wondering if oil came down. Is this a function? Oh yeah, look at that. Look at that. Oil was 85, now we're 84. That's what's helping us. And look at the yields. Everything is helping us. We were 7, now we're 6.5. All of the macro flow is helping us, and that's what's giving us a lift. I should have been looking at that a little bit earlier, but that's definitely helping us. So that is what's driving the price through all the levels. London high now is 722. We're through the prior level session, but now I'm looking for a little bit of a. Let's see if I get a little bit of a pullback. So far, no red diamonds. Just looking at my, oops, no, cancel. I want to go here. Oh, maybe here. Sorry. This is my, so we have a, sorry, I want to go into my 61 account. I'm in the 61 account. Let me show this to you. Oh, because I'm in the other, that's what I hate about TradingView. I'm on the 61 account here. So I'm just taking one more scalp, strong scalp to the upside. Let's see if this is going to work for me. And if it does, it's probably going to give me a really good clue to the reversal signal. But let's see if I get one last juice to the upside here. I'm going to go into both views. Oh, there we go. I'm going to take this profit. Nice. Okay. This puts us 7 for 7 on the scalp side, which is beautiful. And still no reversal signals at all. Actually shows a breakout above prior day's low. Like, this is really hard for me to take. I'll be the first one to admit I have a very hard time taking strength into strength signals, but this would be a very good day trading signal. We are literally above the prior day's low. Remember, if the diamond is above, floating above, that's a big breakout signal, right? So this would be a nice good long that actually extended now to 39s. But anyways, we took the scalp. That's good enough. You see how clean the signals are now as we're climbing. We're just in this beautiful trend move, and it's basically catching every breakout on the trend move. But I have a really, honestly, there's zero reason why I should doubt the process, because the process is so good. Diamond that is above the high, right? In other words, the low is sitting above the high. That's a legit breakout. You trade it to the long side. A diamond that is above the prior day's high, legit breakout. You trade it to the upside. Just take that trade. Don't doubt the breakout. I always have a hard time doing that. Look at how volatile the climate is now. The climate gets up into the threes. That's a very, very overbought condition. Between 3 and 4, it's just kind of screaming overbuy. Anybody trading this to the long side right now? Who's taking all the momentum trades? I bet DRD is doing it. Doctor, are you there still? I bet he's taking it. Hound Dog, are you taking all the greens? And Miguel, holding and trailing. Nice. Very good. You guys are all trading better than me, is the whole point. I finally get my reversal signal. All right, so let's play. Okay, I'm gonna go to the 60 account. And look at my reversal signal. No, my reversal signal is still in play. I'm going to be selling this. Nope, it goes away. Oh, you teaser. Still a long scalp, actually, a legit scalp. But I'm not taking the scalp because I'm on the other account. I'm hunting the red diamond for a reversal move. Let's see if I get it. Oh man. Nice clean reversal, man. 150 points. We went from being down 1% to like up 0.5%. That is a nice reversal. And pretty unusual this time of the day, but I guess, I'm sure. I wonder if we have any news, if anything is happening. Oh, U.S. Treasury current maximum size $2 billion per operation for the intervention. I just did supporting a long bond. Okay, that's cool. That's helping the market, obviously. You got out early in the ES? I hear you. I'm waiting for that red diamond, baby, which ain't happening. Remember, sometimes you got to just stop this thing for 45 minutes before you get the actual signal. Oh, God, man, I'm getting allergies. I'm sorry, guys. I'm rubbing my nose like I have a 10-year Coke habit, but it's allergies. I promise you. Red down arrow is telling you that it's thank you. It's actually an early red reversal. Let's take it. What the fuck? It's kind of an early red reversal signal, not a full volatility down. It's kind of an early warning signal. Not like the best of signals, but I'm going to take it as as just a shot. Going to stay above the London highs here as my stop. We give it a shot. Let's see if this is going to work. The signal that we're looking for is actually the diamond signal, that's a high volatility one. This one just tells you warning, weakness showing up. So let's see if the warning turns into a viable trade yet. But that's not quite the signal that that we want. Oh, hey. Guess who we have in the room here? All right, beautiful. Hang on a second. Let me. I'm going to go to camera view here. Let me see if I can do this. Sorry. Hey, I see Sam in the room here. Hey, Sam, how are you? I just need to organize myself here. I think here we go. I want to do Hola two-person. And I want to do, just bear with me a sec, Sam. I want to take myself on camera. No. Don't want to screw this up. How did I screw this up? Wait, do I do this? Sorry, edit this. Oh, maybe, you know what? Look at that. The short worked, which I'm sorry, guys, I'm off. Let me see if I can do this. You know what I'm going to do? I'm just going to do it this way. We're going to do it. Let me see if I can bring. Here, I'm going to do it this way. We're going to do it this way. We're going to bring Sam on. Hey, Sam.
Hey, Boris.
Sorry, I'm gonna.
How are you? Long time.
Good, man. You know, I am doing this desperate. Okay. Oh, this actually works. Okay. Okay. Cool. And then I can share my screen. Hang on, guys. I'm gonna share my screen with you, and I'm gonna bring Sam. Oh, this is really cool. This actually does work.
Sure.
Okay, so I'm gonna share the window. What I want to do? This one. Share. Okay, awesome. All right, hey Sam, how are you? Good, guys. We got Sam Saleh from Hola today, but I want to wrap up the last trade here. So yes, you guys can actually see this now perfectly. So you see this was the early warning sell signal off the London highs. I took it, worked. Sell here, buy here. That's all we do. Nice and clean on the move. We had a massive move here, Sam. Like, look at this.
I know.
Complete reversal. Like, I'm showing my indicator how it. Of course, I did not trust half my signals, which is always the problem, right? You never trust your process. I took literally half the trades that I could have because I was like, there's no way it's going up. There's no way it's going up. And it's all so super clean. Oh, here we go, guys. One more thing. We finally get the red diamond. Really worth a shot. So let's take the red diamond trade here. 5, 4, 3, 4 seconds left. I'm going to sell this. And now we've got to just basically hold against. Hopefully, it's going to work for us. Hold against the highs and see if I could get the move here into the level. So I'm going to nurse this trade, for a while. We'll see if it works out. I'll update you on it. But Sam is here with us today because I want to tell you that what we've been doing here for the last month, which you may find kind of interesting, and I wanted to see. It looks like it's actually working for us, right? Okay, let's just take it. Let's just take the profit. Okay, we'll take the profit. What you see here in on the chart, aside from ignore all the triangles and the diamonds, is session high, session lows, right? So on the chart here, we've been trading. So we have Tokyo high, Tokyo low, London high, London low, New York high. Obviously, New York is not up yet. New York high, New York low, VWAP. Prior day Globex high, Globex low, and prior day New York pit high and low, right? So these are all the levels that we have on the chart working, right? And my argument that I've been making for the last month, which has absolutely been validated, is that the market essentially trades these levels, level to level, right? It trades London lows to, like if you look at the narrative of how the market traded today against these levels, right? We had London lows that held. We just held the London lows. Then we recaptured the VWAP. Then we went and we recaptured the Tokyo highs. And then we went and we recaptured the London highs, which now are all the way over here. And then we recaptured the prior day's lows. So like today was just one of those perfect days where it sort of showed everything. But what my argument here is that it's not fib levels, it's not ICT that are invented on the thing. What institutional flow does, because you've traded, of course, a lot institutionally, is they're always looking. I remember this even in my dealing room when we were at FXCM. They're always looking at prior day's lows, session lows as key levels because they know that's where the business is going to get done because those are incontrovertible. They're not made up. They are literally recorded on the chart as is. So people know, there's supply and demand around these things. We want to see interest or a disinterest around those levels. Do you agree with me on that?
Oh, 100%. Yeah, 100%. You know, you got to look at the areas of the chart where everyone else would be looking at, especially like what you mentioned, where a lot of trading activity has occurred. And yeah, there's many ways you can identify those areas. And as you said, you know, key highs and lows of different sessions are definitely up there.
That's it. And you know, I just keeping it simple because the indicator just basically collects all this data and shows it to you. It's projected over here, so we're under, like, for example, you know, I don't know if about you, but I'm a horrible momentum trader. Like, you know, I'm always looking for the turn, So one of the things that has really helped me is, of course, like an idiot, you used to always go, "Oh, it's too high. You gotta sell the breakout, sell the breakout." Selling the breakout is the stupidest trade in the world because it's almost always going to be wrong. It's always going to take you higher before it takes you lower. So one of the things that's really helped me is if I'm going to trade the turn, I'm going to just do it only when I see a failure at a level. So in this particular case, we had a failure at London. This is a volatility. This is basically the candle making a full ATR move to the downside, volatility failure. That's when I went short. And that's when I actually had a chance of making money because then we had extension on the short. So I forgot what I was yapping about. But my point is that using these levels has really helped me lessen the stupidity of my, like, you know, make less dumb trades, only come into trades where it makes sense to fade the move. But what I wanted to kind of talk to you about today was I was fascinated to see if, because you're obviously looking at volume delta, and why don't we take a look at your chart here? Let me add your chart to the stage. I'm going to remove mine. Hang on, remove mine. Add yours. And you can explain to people to, you know, what you're trading, and you can look at the price chart. Because what I was fascinated about is I wonder if a lot of your signals will start to dovetail. Like, in other words, if the change in the delta, change in the volume, kind of dovetails with my volatility, you know, reversal signals. So I wanted to see if there was any confluence there for the time.
No, absolutely. And I think, you know, in previous sessions that we've been on, we've had our signals were very in line, which is amazing to see because we were interpreting the markets in different ways, and we came to the same conclusion most of the time. So, but that's just trading 101. You know, so many people have different ways of interpreting the market, but a lot of time you'll see, we come to the same conclusion. I saw a comment in the chat. Is Sam a scalper? I am a scalper. So I'm basically always just looking more at the efficiency of, you know, buyers and sellers. Which one is more aggressive is obviously very important. So this shows the delta at the moment. So the difference between buy contracts traded and sell contracts. Only the aggressive participants are ever shown, never passive orders. And I'm basically trying to figure out.
Sorry, I'm going to slow you down. So we have a whole bunch of new people here, and obviously, and it's, you know,
no worries.
We need to walk them through this a little bit. What's the difference between an aggressive buyer and seller and a passive one?
So an aggressive buyer is basically a market order, right? If I hit the, you know, enter button, the buy button manually, that's an aggressive buy. I'm basically saying I want to get in at the best available price right now. I don't care. Even if I get slippage, doesn't matter. I want to get in right now. That's an aggressive order. A passive order is essentially a pending order. So like a buy limit, you know, you say, I want to get in at 29,660. You place a buy limit there. That's a passive order. Once the market drops down there and triggers you in, your buy limit gets matched up to the next aggressive seller, and the trade is made. And then it appears as a sell actually on the footprint. So essentially, the best way to read the footprint is just remember, new buyers coming in look like buyers. New sellers coming in look like sellers. Buyers taking profit look like buyers. Sellers taking profit look like sellers. Buyers getting stopped out look like sellers. And sellers getting stopped out look like buyers. If you can figure that out and remember that, then it becomes quite easy to interpret when you add a bit of logic. Like if you get to a high and you just see a bunch of buy orders come in, that's buyers taking profit, right? There's loads of sell limits being triggered and being matched up with the next available aggressive buyers. And that's why it appears as buyers always. So add a bit of logic to that, and then it becomes a bit easier to read and you can kind of figure it out.
Mark says, why does
yeah.
it appear as a sell if both of them are passive? One of them,
No, only one
of them is
passive.
not passive. One of them is active.
Yeah, exactly. So if I'm a buyer right now and I enter, I'm going to appear as a buyer, right? Because I've clicked the buy button. Now, if I set my take profit at the top here, let me just draw a line for you. Say I set my take profit here.
Sell.
That's a sell limit order, exactly, a passive order. So when the market comes up and triggers it, it gets matched up. My sell limit gets matched up with any available aggressive buyer, and therefore it appears as a buy on the footprint. Does that make sense?
Yes.
There's always an opposite side of the trade, and it's always aggressive being matched up with a passive, but you only ever see the aggressive on the footprint because it's kind of pointless. You can't show the passive as well. Otherwise everything would just be zero. Do you know what I mean? Like, yeah.
Unless you have passive aggressive personality. No, I'm just kidding.
Exactly.
Yeah. But that's actually fascinating. I mean, the very, very interesting point that Sam is making is that there's always two sides to the market, because when we're in a trade, we only think there's only one side, our side. There's only our side that matters. But there's always a guy on the other side who thinks you're wrong. And, it's a dose of humbleness that we need to have with us every time we trade to truly appreciate that, we're only just probabilistically thinking we're right. We're never actually thinking that we're right.
Absolutely.
Yeah.
No, really good point. Really good point.
Yeah.
And, it's useful because then you can kind of figure out where people are getting stopped out. Like right here, right? You see this little wick at the bottom?
Yeah.
Okay. How many buyers who were trailing, who were up in this, who were in this trade going up, maybe trailed and put their stop loss right below that wick. And the moment we touched it, look at all those sell numbers appear. That's just buyers getting stopped out. That's not new, fresh sellers coming in trying to push the market down. That is literally buyers getting stopped out. So I wouldn't chase that volume. I would ignore it, right? I don't want to chase that volume because there's no true intention behind it. It's just buyers getting out the market.
Sam, if this is just buyers getting stopped out on a retrade, it almost makes you be bullish anytime, like at the 17, when the delta turns green, you kind of just say, hey, this is a super tight risk. I can take it right there at the 17 block, and you get popped. You're good for like I don't know how many points that is, but because I can't see quite the chart, but that's like a super low risk entry on the first possible move, right?
Absolutely. I mean, like I said, the key, you're absolutely right, Boris. And the key is to know which volume to chase and what to ignore and really kind of read it as a story. If you just jump, whenever you see high volume, you just, jump in, you'll get absolutely annihilated in the markets because, you're chasing a lot of exit volume. You're not chasing fresh new volume. Right. You're just getting eaten up left, right, and center. So you've got to know what to ignore, what to actually chase. And you can see it here, for example. So all these were buyers getting stopped out. We ignore that, right? And then you see these 53 buyers that came in. That's real volume. That's new, fresh buyers coming in. It can't be stop losses because they would have already been triggered here. It can't be take profits. Doesn't really make that much sense because if a take profit was here, like sellers putting their take profit, not sellers, sorry, buyers like take profit doesn't make sense, right? Why would it be there? So that's actually real fresh new buyers coming in quite aggressive at 53 contracts, delta, another at 55, and then we got another at 41. That's the volume you want to chase. Do you see what I mean? You don't want to chase the volume that is basically people getting stopped out or taking profit. That's exit volume. You want to chase the volume that's fresh coming in and has intention.
So
it's not always going to work out, but better chance.
So for sure. So let's kind of slow this down just a little bit. Each one of these vertical boxes, like the one stack and the other, that's a candle.
Yeah, exactly.
And is it a 1 minute candle?
Yeah, this is the 1 minute chart.
Okay, that's fine. No, I just want to explain this to everybody who's watching so they understand. So that is literally 1 minute candle stacked in these little boxes of volume. Sam segments is, I believe, by what is your segmentation?
It's
structure?
at the moment, I believe it's on 16 ticks per box. So basically 4 points. Every box is 4 points.
Every box is 4 points.
Let me
So
just double check. I'm pretty sure.
Yeah.
I put it
Hey,
at
can
16.
I ask you? So
Yeah,
the other thing is obviously we're big fans of ATR. We've been where's my ATR actually? Oh, hang on a second. Oh, for some reason my ATR just went off the view. I don't know why. Oh, maybe I. Sorry. Let me. I get confused with my own view here. Why is my ATR not showing?
I'll just answer a question while you do that.
Okay. Sorry. Anyways, my point was let's just imagine ATR is 10 right now, right?
Yeah.
Which is what is that? That's 40 ticks, right? 40 ticks. Would you create a box based upon ATR reading as kind of a a fraction of ATR, like
I mean,
40 ticks basically.
You could.
Like
you could. Yeah, I get what you're saying. You absolutely could. Personally, I just do it based on just what looks right to my eyes. So I kind of want maybe 4 or 5 boxes per candle. Too many becomes too hard to read. Too little, you're actually missing information then a bit, because then it all groups it into too big of an area. And so I kind of just change it always 4 points up, down, whatever. Not 4 points, sorry, 4 ticks up or down, depending on how volatile the market is. 16 seems to look quite nice right now, but say the candles get bigger on average, I might bump it up to 20. But it's literally just for my eyes. What looks clean.
Honestly, I bet you if we ran that against, like right now ATR is 16, right? So I bet you if we ran, basically you are dividing it in a fifth of an ATR, 20% of ATR pretty much on every one of these things.
Yeah.
Kind of just almost intuitively on the thing.
Yeah, exactly.
Makes sense.
Yeah.
Which makes sense. The other thing that I want to ask you is that there was a question here: is footprint different from bookmap?
So footprint is just a type of charting, like a type of chart. Bookmap, I believe, have their own footprint add-on or whatever you call it. I personally don't use bookmap, but they're more for the depth of market and the heat maps. But absolutely, there will be a footprint version of within bookmap. But any order flow platform will have some kind of footprint. Some call it cluster volume, cluster delta. I don't know. They have different names for it, but essentially it's the same thing. Yeah.
And then they overlay footprint against volume profile as well, right?
Yeah. Yeah, absolutely.
All of these are essentially ways to slice and dice volume measurement, right? And like Sam says, the important part isn't how you slice and dice the volume measurement; it's how you interpret it. That's the much more important part. The way Sam has it sliced and diced is very, very clean and simple. You can see that it mirrors the price action. So essentially, I would imagine he's probably looking at clues from volume and price points on the chart, because you can literally see, swing lows, swing highs here on this 1 minute chart as reasonable, rational stop points against whatever structure that he wants to take, right?
Yeah, exactly.
The purple boxes are more than green ones, then sellers are in control. The purple boxes is sellers, right?
Yeah, purple is sellers, green are buyers, and it's just a difference between buy contracts and sell contracts traded. It doesn't necessarily mean exactly. It doesn't necessarily mean if there's more purple or more sellers, but it's going to go down, because, like I said, you got to read the correct volume, right? Like here, there were more sellers, clearly 109, but we know and we identified using logic that wasn't true sellers. That was just buyers getting stopped out, right? There's no real intention behind this volume. Okay, it's not like a big institution came in dropping 100 contracts there, trying to short this market and going to start defending their position. It was literally buyers getting out.
Right. To put this into option terms, and this is a way that maybe you guys will really understand this. this was closing price action, not opening price action. And
Yes.
and what you really want to do is somebody making an opening move, because if they're making an opening move, then there's something interesting. That means that they are forecasting future that could be interesting to you. If they're closing the move, there's no future forecastable value, except maybe contrary value to what you're seeing. So a lot of people, I guess, making that mistake that they are basing their future decisions based upon closing price action rather than opening price action, and that's where they're making that mistake.
Absolutely. Very well said. Couldn't have said it better myself. And intention matters in the market, right? Because if there's a big player in the market, right, it can even be a retail trader. There's some huge retail traders nowadays,
Right.
Let's say there's like a big institution, whatever you want to call it, right? And they're genuinely placing a lot of money in the market, a lot of risk on the table. All right. Two things are going to happen. They're either going to defend that position very well, and they're not going to, they're going to keep basically absorbing the other side and try their very best to get the market in their direction. So you want to be aligned with them. But if they fail, and they do fail, institutions get it wrong all the time. They lose money all the time. It's not like they have 100% win rate.
Yeah,
right?
Yeah. That's what people. That's
but if they do fail,
people completely miss is that institutions are not infallible by any means of imagination.
Exactly. And if they do fail, you will be able to clearly see it on the chart, and right, time to get out that trade. You cut your loss as well. So you're not anymore. There's no confusion of whether should I still stay in this trade. If you see, the person you jumped on the trade with also getting out or getting stopped out, all right, time to get out. It kind of gives you a good exit as well. And know when you're wrong. You kind of, because you're essentially just jumping. You're just collecting crumbs, from big players in the market. That's all you're doing essentially.
Right. You're riding behind their flow. You're surfing. They're leading the pack. And you are like a bicyclist who coasts again, behind the guy aerodynamically. You're just coasting off of it and collecting his premium, collecting his profit.
Exactly.
Yeah. So we're like 10 minutes to the open. It still looks bullish. I mean, price action, we're pretty much near session highs, above prior day's lows. I mean, just sort of slow, but. You see anything on the volume? And also, I was going to ask you: do you trade opening minute, or opening first 5 minutes?
I generally stay away unless I see something really exceptional.
Right.
Usually, the opening few minutes can be a little bit too hectic for me.
Yeah.
And I like to kind of allow all the chaos to kind of happen, and then once there's a little bit more clarity, I want to jump in.
Right.
But I like to hawk the opening, at least few minute candles, 1, 2, whatever, first few candles, because it kind of gives me an idea of the intention, because you get all these big players coming in, and it kind of gives you an idea of the intention of where the market, or at least the intention where they want to bring the market. If you see a lot of buyers coming in, but they start failing, and then sellers coming in, and there's a bit of a like up and down battle, generally speaking, for the rest, not for the whole session, but at least for the next hour or two, it might be a bit rangy, might kind of go up and down. It doesn't really go anywhere. But if you get that kind of straight out of the open, buyers rush in and they're doing really well and the market's shooting up, usually indicates, we're probably going to start trending. So, you want to look for a pullback and then a good entry on the next opportunity. So it's good to kind of really, watch it, but don't be afraid to sit back. You don't have to participate in the chaos if it's a bit too much,
Right. Yeah. Totally. It looks like the other thing is interesting. You can see sometimes price slowing down and volume reflecting. It looks like we're slowing down a little bit. Now we're starting to pop. Still near session highs. I guess, what are you seeing here? Any just kind of a moderate volume up?
I'm not seeing anything too crazy right now, even in the volume going up. To be honest, like what I would have expected is once we crossed that high there, that line was terrible, sorry. When we crossed, I would have expected to see some kind of large buy volume come in, indicating, some of these sellers who came in maybe got stopped out. But it looks like some sellers are actually holding on to their position. We're not really seeing a spike in volume occur.
Well, that's interesting.
So I wouldn't be surprised if sellers might try and hold on to their position and try and push it down again. But we'll see. but I'm not seeing anything spectacular. Nothing I would personally want to jump in. I like to wait for the open, just because the volume is, again, easier to read as well, because there's larger amounts of volume. So it just becomes that little bit, gives you a little bit more clarity, you know. When the volume's low, very hard to trade a low volume market.
Yeah, because you can't read it. There's, you know, because and one guy with large volume completely obliterates whatever you think is happening. Right.
Exactly.
Yeah,
exactly
absolutely. Sam, how many trades, how many scalps do you usually do a day, or like what's your routine? I know you also trade live in a room, right? I think.
Yeah. I usually, honestly, like now, I kind of take it a lot more easy. I usually like to take one or two. It depends on, you know, if the first one kind of, because you get a lot of failed trades as a scalper, right? I would, for example, let's say I enter long now. I'm not saying enter long, but just for example, if I enter long now, you know, the market might push up a little bit, but then, you know, it might come back, and I've already got my, you know, and I see like there's a change in kind of the aggression, and I kind of get out at like near enough break even. That's kind of like a failed trade. You get a lot of those kind of where the move looks like it's about to happen, and it kind of doesn't, and then you're kind of waiting for that perfect opportunity to jump in. So sometimes, you know, you're firing bullets and they kind of don't hit their target right away, but then you know, you catch that. There's always a trade every single day. That's always, especially as a scalper, there's always a great trade. And look, just like we said, we saw it in the volume. We didn't see any of these sellers get stopped out. They're still holding on to their position. They're now starting to add, you know, they weren't out the markets, then they weren't giving up just yet. So, you know, it gives you such clarity being able to read that volume. But yeah, I probably take maybe 2 or 3 trades maximum nowadays. A day.
Does that include scratches, or are you like 2 or 3 real trades and probably like 3 or 4 scratches in there?
Exactly. And you know, if like my first trade is really good, happens sometimes where it's just perfect, I'll close it down for the day. I'm happy.
You're happy. What's the what do you usually target on the scalp?
As in terms of points, or
in terms of points.
Again, really, I kind of, whatever the market gives me. There's no, I never really have a fixed take profit. Like even let's say we're long, and naturally most people's take profit is going to be this high, right? That's quite an obvious area. If we get to that high, I'm holding it and seeing how much further we can go, and I'll trail, and I'll get scratched out whenever it happens, you know. Or if it's just before and I see that it looks like we're not, maybe like right now what's happening, you know, it looks like sellers aren't really giving up their position. I'll probably take the money. Do you know what I mean? It's fine. I'm a few points away. Who cares? Just take it, be happy, you know. So again, stop loss has to be fixed. There's no negotiating that, in my opinion. You know,
what's your general stop loss on your scalps? Is it a 10 point?
It's usually based on structure. So again, completely
what if
depends.
Structure is super wide? I mean, is there
then like that? I probably won't take the trade then. If my stop loss has to be like really big, I probably won't take it. But I usually, it's not always.
What's the most that you'll kind of, you know, allow yourself?
Maybe like on a very volatile, maybe 15 points, 15,
wow,
20
that's
max.
really little. Because like ATR now in a relatively, like 15 points is probably a half ATR on the open. Like when New York opens, it's around 25 ATR, then it goes to 35 ATR, and sometimes it's been as high as 40. So if you're giving yourself 15, man, you are just giving zero margin for error there. But I guess
because the thing is, like I said, so for example, let's say I'm interested in taking a short here. I'm seeing good volume came in just there. It wasn't really that great, but say we saw some good volume and I got in short. Yeah, my stop, like even if we get above this 18, my stop, my absolute stop has to be here, right? Absolute. No negotiation. But say, for example, we started drifting above that 18 where my sellers who I jumped in with, and we start going into drawdown and I see no real sellers coming in trying to defend that, I'm getting out. So I don't even allow my stop loss sometimes to even get here. I'm like, okay, it looks like the sellers are just not interested right now. I'd rather get out. So you have an absolute stop. And
for those of you guys who are interested, I do have a London high sell signal right now, but we are literally 2 minutes away from the open. So that is like basically take, you're just looking to get stopped out. But if it's 721 entry against like a 765 stop type of a structure, only if they just sell it down is this trade going to work. But it is a signal. I do have a signal. The volatility, they sort of, you see this in the volume too. They brought it down. What do you see on the volume side? Do you see, is this fresh selling volume, or is this kind of closing volume?
I mean, a few minutes usually before the open, you see a lot of people exiting, just getting the hell out. So I'm going to assume a lot of this volume are exits, but it could be either. Whenever we're in kind of unexplored territory in the last few candles, it's hard to identify what the volume is.
Right.
I like the volume that is, within the inside of other candles that have just traded. Like this volume here, very easy to read. It has to be fresh volume, right? These sellers can't be stop losses, can't be take profits. It has to be fresh sellers because we already traded there. And if I was interested in the short, that's not a bad idea to go in short. Do you see what I mean?
Right.
But right now, just before the open, this is probably a lot of people exiting. It becomes a bit chaotic. I don't even try and attempt to figure out what's going on. I just let it happen, let it calm down, and yeah.
But I just, for those of you guys who may have taken the signal, it's already in for you guys. We came in at 21, and now it's actually broke through the 700. So if you had the balls to front the open, you could have covered it now at a nice move. But as you can see, you snooze, you lose. It pops right back up. But they're still trying to press it. I'm seeing volatility signals down. We broke prior day's trading high, so it basically broke below the 700 level. The market is sort of testing the reversal thesis here. They ran it up before the open, and now they've kind of taken it all down.
Yep, absolutely. And super interesting to watch. So the first opening candle, always good to kind of just keep your eye on how it develops and the kind of volume coming in. Sellers seem to be definitely a bit more in control, but buyers are interested near the lows here. Let it play out. Let a few candles go by before you rush in. Try not to chase the market when there's too much of a battle going on. Let the battle occur, and then I promise you, there's always, if you just wait another couple of minutes, sometimes the clarity then becomes clear. It's that, try not to let FOMO get in the way. And that's very hard because it's still to this day, I get FOMO and I'm like,
Oh, we all get FOMO.
Yeah.
And sometimes the wrong FOMO, we get scared FOMO. We're like, we should be taking the trade and we're going the other way.
Absolutely.
Yeah. Oh man, I'm trying to adjust my sessions, and I'm on the wrong menu here. So New York is 12. The opening candle here is opening first range candle 717 to 638. It's about a 60-70 point range, which is pretty small, tight range. ATR now is at 20, so the average candle is basically 20 points large. London high sits at 759. Prior day high sits at 770. Regular trading hours high. So the pit session high is at 770. So that's where the market, I think, is going to get interested.
Mm-hmm. Absolutely.
So it looks like a little bit of buying coming in, huh?
Yeah, a little bit is coming in, but again, hard to kind of identify who these buyers are, because we did just take out the wick here. That could be an element of sellers who did get in the open and their stops are there getting triggered. So whenever there's like a question mark on the volume, I tend to kind of not base trading decisions on it. But we jumped up to 200 there. There were some fresh buyers came in. It went from 100 something to 200. So a big chunk of buyers did actually come in there fresh. Let's see how effective they are.
I have a volatility up candle now. So essentially, sort of, not a horrible idea to get long here. Oh, oops! I just lost all my signals. There we go. Okay.
So I'm interested to see what these buyers who did come in, what they'll do here. You see sell pressure coming in.
So I tell you what's super interesting that happens on my charts. I'd love to know what this. We have like this structure where we have volatility up, right, and then the next candle is volatility down. So like the sellers reverse everything the buyers are doing in the very next candle. Usually, when that happens, we always go with the last flow. Like whoever's got the last power card. Like I'm going to sell this right now, guys. I'm short on this move right now. I'm short at around, and boom, and I'm in and out. So like you can see. So I don't know if that shows up on your chart here, but like you see how like all the buyer. See, now it's moving even further down, right? Like that's I guess on the delta chart, if you have like the full top stub is all green, and then you have the full bottom stub all purple, that would parallel. That would show the same kind of thing that's going on my vol up, vol down structure like this. And that signal is rare. It happens maybe once or twice a session, but when it does, it's such a high probability. It's a high probability trade for short-term content. You see how it's building all those purples? It's basically all the shorts killing, like all the longs are trapped, and now they got to get the fuck out. That's what it is.
Exactly that.
And so that's what that's what we trade, and it's just great for like the short continuity move to the downside.
Yeah.
So,
and people are getting eaten up right now, left, right, and center. Like these guys here, these buyers who came in, we definitely identified at least 100 of them were fresh buyers. They were doing okay for a few seconds, and then sellers
and they just and that's what I mean. And then now they're all puking it up. They have to be puking it up.
Exactly. And you can literally see where their stops are, right?
Yeah.
Right below their entry candle, then all of a sudden a similar value, but on the sell side appears.
Right.
That's them getting stopped out. They're out the market. That was their trade.
Right.
Exactly. And look, and these are big players. These are not small retail traders. There's people with serious money here. And it just shows even they get it wrong sometimes, and that's absolutely fine. But they look at their risk management. They're not placing their stop loss, 500 points away or something ridiculous. They're keeping it super tight. If they're wrong, they're wrong. It's absolutely fine. They tried their best to try and defend their position, but they got taken out. That's okay.
Right.
And you're going to have times like that. And that's when if you were to take that long, if you saw that, and then, if you took that long based on these guys and you're in that position, you see them all getting stopped out. Time to go out as well. Get out the market. It's fine. It's not going to anymore go up. The guys you were jumping on board with are out the market. It's okay. You get out the market as well.
I just want to. I'm going to take your chart off for just 1 second and put mine on just to show people.
Yeah, sure.
The superimposition. So if you look at my chart, right, the thing that I'm talking about here, and here's my. You see this. This is where Sam's all the buy segments were over here, and then you see all his sell segments were coming over here. For me, this is the diamond green against the diamond red. I went right there, short over here, right on this candle, because it was the easiest trade. And then you see the extension. It doesn't always extend this much, but it always extends at least somewhat to the downside. Because what I'm basically seeing is ATR up, ATR down, massive volatility up, completely reversed by volatility down. The price action is showing. And so, like, if we go back now to Sam's chart, and you see that, if you can just bring it down a little bit, you see how that little stub over there had from 212 green. That was all buyers, and they all got completely shaded by the sellers. And then the sellers just kept pressing it. So you could have picked it up either way on
absolutely
on the Delta charts or on my charts.
Absolutely. And if we draw out this low here, where any remaining buyers who came in on this, look at them all getting stopped out. Nice little spike in volume.
You see all of that purple volume. So now like sort of everybody got puked out. Now we're at the New York session lows at 614. Excuse me.
Bless you.
It's sneezing all morning long, Sam. I know, just driving everybody crazy. We're actually at New York session lows, and I think, is this what's underneath? I can't even see, because I think it's Tokyo highs. Tokyo highs, New York session lows are all crumpled up at this level right here, the price level here.
Yep.
And what will be interesting to see is, let's see if we get continuity, if we get a bounce here. I'll tell you if I get it. I'll tell you what kind of signals I get. So far, I have absolutely no signals. But it'll be interesting to see what the volume is showing as well. Right now, you're still seeing a lot of sellers. The sellers are pressing.
Yeah, there's still a lot of sellers coming in. I'm kind of waiting for some kind of indication that sellers are kind of getting out the market a bit, not necessarily to buy, but to kind of, it's a bit late in the move. Do you know what I mean?
Right. They're covering their opens. They're covering their opens.
Exactly.
Right.
So we kind of got to wait for the next cycle to appear.
606. We're back to the 600 level. So we ran through the 700. Now we're back to the 600, and probably they want to test that round number always. Does Sam do London and Asian highs and lows like Boris? I don't think so. I don't think he follows session highs, session lows. But
no, I mean, I sometimes have them on my chart, but I mostly follow the volume profile. So if I just zoom out, sorry, it's a 1 minute chart, so it's a bit takes a lot of scrolling. But essentially, I'm looking at basically where the most traded volume is. So this is obviously the highest traded volume. Here's the point of control. And I'm also looking at little pockets of lower volume. We haven't really had that in this session, so there's nothing really there. But when we get to this kind of area, I would expect to see something happen. At least either sellers get slowed down.
What mark is that? What mark is that on the price level? Is that
the purple one? That's
520?
the highest. Oh yeah, 29,520 roughly. Yeah.
Okay. All right. I wonder if that dovetails with any of my says. Yeah, you know what that dovetails with? That dovetails with essentially there's 3 level sessions on my thing. Prior days Globex low, prior days pit low, and London low are all within like 10 points of that level. So it's really interesting.
Nice.
It's really interesting how your points of control and my basically session high, session lows, they're all coagulate around those same points. It's not a surprise.
Absolutely. And what's interesting here, it's actually on the previous days, point of control was right here, this purple line.
Right.
And today we broke it. We broke it today, and now we've come back to test it. This would generally speaking, there's usually a good chance buyers are going to step in and try and retake control again around that kind of area. So it might not be a bad idea to zoom in and
why don't we zoom in? You zoom in on your thing, and I'll tell you what right now, all I'm seeing is just selling. I see zero buying indicators. I don't have any
big chunk of buyers came in. But let's see, we don't want to chase them necessarily. Definitely something occurred here, this 122. I need to just check on structure if there's anything obvious. Try and identify big sellers came in actually, trying to really, that could be those buyers actually getting out at break even or just below, getting stopped out. I think that's more likely what it is. Right, we had a chunk of buyers try and take control. They got wiped out. It looks like sellers might overrun this, to be honest. Buyers weren't posting volume near the highs.
We just crushed VWAP, means we just broke VWAP. This is the one word in English I can never pronounce, VWAP. The New York lows at 560 now.
Again,
so is that an exhaustion now? Now we have like an exhaustion seller. You see little buyers coming in.
Yeah, so we have buyers again trying to take control. But what's important, in order for a trade to actually stick, right? Yes, you need buyers to come in. If you want some kind of reversal, you need buyers to come in hard, of course. But they cannot lose steam near the highs, right? If they push it up back to these kind of wick highs, and you just see no buyers are interested in trading there, guess what? It's dropping down, right? They need actually, what you need in order to break through an area, you need buyers willing to buy at unfavorable prices. And that doesn't always happen, right? People are, if we get to these highs again, there might not be that many people willing to actually aggressively buy there because it's a little bit dangerous now. Do you know what I mean?
Right.
But if buyers do come in heavy at these highs, we could actually break it and start, at least some kind of retracement at very least. Do you know what I mean? And get some kind of trade in. So let's just keep on. It's still very, very volatile. It's still moving a lot more than I expected. So we're approaching these highs. Let's see how the volume, looking at big buyers coming in, they might actually be able to pop and break out this high here. We're going to expect to see a big chunk of volume.
My first positive green signal, not a buy signal, but a warning to the sellers that this is the price is turning. It's kind of like it's a weak upside signal now, which is very early. It's always early, so it tends to be like if you get lucky on the early move, it's on a V-shaped move, it's worth a shot. But it's not a high probability, but it's an early signal right now. So I would be like this if you wanted to be long here. You would be long at this price. I'd be long at 615. And actually,
I mean, a lot of sellers are getting trailed out. You're seeing these spikes in volume every time we kind of break little highs. So sellers are getting trailed out. But what you have to remember that only because sellers have been stopped out doesn't necessarily mean they won't jump back in, right? This is favorable prices for sellers right now. We are in sell territory, right? A lot of people are going to be looking at this and say, we pushed down very hard. This is merely a retracement. It's a great time to short, right? And sellers could come in very hard and take control of this market. And that's where that's where the trending pattern comes from, higher highs, higher lows, lower highs, lower lows, etc. Right? So right now, this is favorable prices for sellers. If sellers pile it on and come in hard, guess what? We're going to go down. Do you know what I mean? But if they're not willing to, if we don't see sellers really stepping it up and buyers are still willing to keep buying, then we could get more of an extension up again. So you really gotta read kind of who is aggressive in this moment. Do you know what I mean? Sellers didn't come in very strong yet. Okay, buyers are still kind of equal in many ways. 40 here. Buyers are coming in actually a little bit more aggressively than sellers, and they're willing. So it's kind of, I wouldn't be opposed to taking longs or shorts here. All I want to see now is I want it to calm down a little bit because it is very up and down choppy. There's a big battle going on. And when there is a battle, the outcome hasn't been determined yet. Do you know what I mean? So you want to step back, wait a little bit, just kind of see who kind of gives up first. Once you see one side kind of laying off the gas, then you know which side to align to, right? So it's all about being patient, waiting a few seconds. Don't try and chase the volume or the candle. Just let it play out, and then the clarity will come.
But the bottom line from my perspective right now is that New York lows are holding. And since they're holding New York lows, positionally, I don't have a positional target. I'm long, guys, just to let you know. I went long and I'm still a little bit long for like a long target here because I'm basically betting that the New York lows have held. And I'm actually going to take profit here right now. Nicely.
Nice.
So
nice.
So I took profits on those, but I am trading off structure. Basically, I saw that they try to bring New York low again, and they couldn't bring it. They couldn't. The sellers could not bring New York lows. Now the situation could change very quickly. So it's not that the New York low is set in stone here. It's just that for the last two candles, the buyers. The sellers couldn't make. If they can't make fresh lows, then the opportunity to squeeze them higher becomes better. Right now, it's still very determined. I basically had early green signals, early green possible signals, but still no definitive volatility breakout to the upside signal yet. The buyers still, to me, the buyers in my structure, the buyers are not in control.
No,
and it looks like the sellers are probing in your structure, right? They're still probing it.
Yeah, 100%. Sellers are starting to pile on the orders a little bit lower down, but buyers are also piling it on. It's still, for me, this could very easily still pop up after, or it could continue. There's nothing for me that I would put real money on right this second.
Yeah, it's a tug of war.
It's just because the thing is, in this second, it could look a bit more bullish or bearish. But then give it 20 seconds, a big buyer might come in, or a big set, and then everything changes. So you got to be quick to kind of, all right, get out, and if you do jump in, because it really is a domino effect, the market, right? It's absolutely a domino effect.
Yeah, you can really see that in a delta.
Big, look at that.
Whoa.
Huge sellers just came in. No way of knowing that would happen. Right? There's no way of knowing sellers would just, a big seller would come in that second. But they did. So that's why I'm saying it's like very dangerous to trade when the market's like this and there's a big battle going on. Just be a bit patient. I'm telling you, the perfect opportunity will arise when it calms down a bit, you know? But yeah, buyers couldn't really, you know, they didn't put enough volume at the top, you know? So we'll allow that to...
now, and the 29.5 looms large. I wonder, let me see if the macro picture has changed a little bit. Let's see if oil got, let's see what we're looking at. Yeah, oil popping up again. So that's, you know, that's sort of acting as an annoyance. Yields are still down, but oil off of its lows. Clearly, the market doesn't like that. So we're really pressing it hard here. We just broke did we just break the 500? Wow, it's New York. Yeah, we just fresh. Tokyo lows is 430. Yeah, we just blew
really
through
flooded down.
So this was a big seller. Now, these kind of things, what I find interesting is if you give it 5-10 minutes, we might actually have a reversal signal here. Yeah. But you have to really be patient. On my side, it really takes a while to turn this into a buy signal. Probably on your side too.
Oh, 100%. I like to wait at least, realistically speaking, after the open. Just wait for it to calm down, and then the trades appear. You know, I've noticed recently around my time, around 4 p.m. has been a really great time. So that's hour and a half after open. It's been really nice to trade. Obviously, it changes over the time of year.
Sam is trading, by the way, with data feed this year. He's trading Tradingview. He's just trading.
Yeah. For deep charts, it's rhythmic feed. Yeah.
Oh, these charts are rhythmic on that one. Okay.
Yeah. And then this is a Hola Prime futures Tradingview account. Yeah.
Right.
Yeah.
Why would somebody do themselves when you can swing and relax? Because there's no such thing as relaxing. You know, swing. All it means when you're swinging is that you're going to just lose more money on bigger stops. There's no guarantee that a swing actually has any probability higher than a scalp. It's just a personality thing. Like, you know, if you like to trade short term or long term, but like, don't fool yourself into thinking that swing somehow is superior because it's a longer time frame. It just means longer torture for you. If you're it means you're going to be tortured over hours and days versus being tortured over minutes or seconds. That's all.
It's funny you say that, because when I've tried swing trading, I sucked at swing trading because I like you said, you're just extending the torture. I would look at the chart constantly, and I couldn't relax. And at least with scalp, I mean, look, like you said, it's personal preference. Some people can just relax on a swing trade, and fair play to you if you're that person. But me personally, no, I'm geared to be a scalper.
Exactly. It all depends on your structure. By the way, guys, we're just pounding. I mean, we are in a super strong. Like, what's really interesting is, as strong as we were buyers in the 8 o'clock hour, so we are sellers now. And then nobody could predict this. And that's the whole point, is that there's zero predictability of this kind of swing up or swing down. All you can do is intelligently react to it. Because anybody who told you, oh, you know, we're going to go down to here and up to here. No, you couldn't have guessed at 8 o'clock that you had a 200-point rally. You couldn't have guessed on the open that you're going to have a 150-point decline on the move, right? And I guarantee you, if we go 300 points up higher by the end of the day, none of you could have guessed that either, right? Because we just don't know what the next hour or the next buy. Well, that's why scalping kind of is interesting, because you don't need to forecast the next hour. You're just trying to forecast the next minute or two, which is an easier handicap some ways.
Absolutely. Well said. Yeah, no, I mean, trying to predict, what's going to happen in the next couple of hours and stuff. The reality is, trading really is a domino effect. You know, in order for the market to go up, there has to be certain things have to happen in a certain order for that to continue. For us to do a
Right.
full-scale reversal, you're going to need to get sellers exiting the market, number one, right? Taking their money out the market. B, a whole fresh new wave of buyers coming in. And then buyers need to defeat sellers where they're trailing and where their stops are going to be.
And the straggling sellers, all those swing market sellers, getting out because they're not. I actually, guys, have right now 26 seconds. My first long signal, like green diamond signal.
Nice.
Now I'm waiting. It's got to complete the candle. But if we do, we're going to trade off the session lows. It goes away. It goes away. Don't rush it. I will tell you if it's a legit signal. The vol just went away. God damn it. I love it. I love when I have the signal, but here we go. Good. It closed on the, so I'm long. I'm long now against New York session lows, guys. So that is where I'm long. And we'll see if we can pull this up a little bit to the upside. So I'm basically holding, this is your swing long. I'm not doing a scalp long. I am holding it against New York lows at 407. And I'm trying to see if I can get maybe like 480, 59, basically 500 is my target, somewhere around there. So you got to give you, this could be a 5, 10, 15 minute trade. Or it could be a very quick stop out either way, but we'll have to see. But at least now, like what my structure is showing is that the probability of a bounce is possible. That's all you can take away from my signal, is that the possibility of a bounce is possible. How's it looking on the volume charts?
Yeah, I'm just hawking the volume right now to see who's coming in. I'm trying to see if there's any big orders come in. So what's important to look at, let me just make this bigger just for the viewers. You see when these numbers are developing, say this went from -10 to all of a sudden positive 80 in one instant, that's a good sign, right? Because that means 90 plus buy contracts came in a second, most likely from one entity or individual.
Right.
Do you know what I mean? So I'm looking also at the chunks of volume coming in.
Yep. I'm out,
is
guys.
A very nice
the 500 hit, so that was nice. That was another swing trade to the upside.
Beautiful.
So, just letting you guys know, I'm actually getting a secondary buy confirmation, secondary vol confirmation. So volatility broke up, and it's kind of interesting. It's definitely showing positive moves here. So it's. Oh no! Actually, sorry. I take it back. Just only I don't have a secondary confirmation. It just died on me. So, and you see that it dying out on the volume. But the bottom line is, even with the volume, with the delta, even if you weren't scalping and you were sort of swing trading, you can just use structure, like the absolute low structure as a kind of a longer term stop. And then maybe the moves in delta. That's that. Once you start seeing those green boxes start building, you can absolutely use that as an entry, right?
100%. I'm starting to look. I quite like this as a potential buy because I'm seeing a bit more buyers, but I just want to see a bit more bigger numbers coming in. Truth be told, 40 is okay, but I just want to see a big chunk of buyers come in to really. Sellers are still trying to short the tops of it.
Yeah. You want the buyers to come in and destroy the sellers.
Yeah, I want to see sellers get trapped at the bottom and buyers trade above them. So we got that 45 on the sellers near the bottom. I want to see buyers get above and post big volume around here. Then I'm happy to go in. So I'm just waiting. Just want to see buyers trap those sellers. If sellers manage to break through, then all right, it's cancelled. It's not a trade. But
breakthrough where?
Yeah, all right. I'll go in and I can have my stop just below. Sorry, this is a brand new account, so put a sell stop here. I don't know why the line's not appearing. Let me try to figure this out. There should be a line. All right, doesn't matter. But we'll put a stop there. Where's the exit button? Sorry, I haven't. Oh, there's exit button. Let me make that a bit bigger. In fact, let me make this bigger. There we go. What I want to see is buyers really kind of come in at the highs and trap some of these sellers at the bottom. We're going sideways a bit.
Yep.
I want to see buyers come in. Obviously, they'll come in at the bottom. That's expected. You're expecting buyers to come in here, but I need buyers to come in at the top, right?
Right.
Like where we are right now. I need buyers to add volume.
Right.
And then we can get a pop.
Volume a little bit here. They're just trying to break it out.
They went from 50 to 20. That means a big chunk of sellers came in, but I'm seeing a few buyers coming in, but I need bigger numbers. If they're unable to really get that pop, it'll be time to potentially. So it's very critical what's happening here. I need buyers to absorb these sellers and really push them up. If it doesn't happen, then we're just going to rotate up and down for a bit. Come on, buyers, where are you? There's a trickle coming in, but they just at the top here. This went from, I think it was like 50 to 20. I need to see. There's a bit more buyers coming in, but we need to trap those sellers. We don't want to get much lower than those sellers.
It's a tug of war, baby, until, like this candle, like it's the bottom top candle. That's, you got to just.
Oh, there was a nice little chunk. Yeah. All right. I want to see these buyers hold the line. Come on, buyers. Don't let these sellers overrun you here. Hold the line. Keep holding it. Good. They are struggling a little bit in getting this market up right there. Look, there we go. Come on. Trap those sellers right there. Beautiful. Now add volume here. Come on, buyers. Yeah, they just keep failing and adding volume near the top. So it looks like it might just rotate down a little bit and keep going sideways. And we'll wait for a better opportunity here.
Yeah. It's
sellers came in quite strong and we're out. Okay, fair play.
Yeah, the sellers
and right there.
Yep.
Do you see that big spike in volume right there? That's me and those other buyers getting stopped out. We both had our stops exactly at the same place.
Right.
And that big chunk, 140, whatever it was.
Right.
That is all those buyers who joined along with me in this area getting stopped out, which is fine.
Yeah.
Because there might be another opportunity. Let's make this a little bit bigger so I can see it. And notice how there's another wave of buyers trying to get the market up, but I'm not going to chase them just yet.
Right.
Because near the bottom, you're expecting buyers to come in, right? That actually doesn't look terrible. It's still very choppy though. See, buyers are getting trapped at the top here.
Yeah,
in this area. And it looks like if sellers come in heavy here, we're going down.
The sellers are keeping it down. For me, I would need to see them clear the 500 level on the
500.
The 29.
Oh, right up here. Yeah. Near the tops.
Right there. If they can clear that level, the sellers are going to give up because that's the London low.
Oh, 100%. Yeah.
They're going to
all the sellers, their stops are up here, right?
Right. So I would
see
really
buyers are willing to post volume, but I still think buyers are going to take this, to be honest. I think they might take it. Sellers struggle near the bottom here as well, but if they come in a little bit strong down here, they will break this level. Sellers will break it here if they come in strong here, but I'm seeing it might not be terrible to re-enter, to be honest. But I don't like how ineffective the buyers are. They are posting a lot of volume here, and we're not really getting much higher, which is my only red flag at this moment in time. But if they come in harder, I think they will break it.
Yeah.
I don't think they need that much more volume.
It's just not quite ready yet. They haven't, I've seen this from price action so many times where you don't need to be early. You need to be right. So there's no need to be a hero right now trying to get long. Let the buyers kill the sellers first.
That's it. You're just waiting for that perfect opportunity.
Right.
A few sellers coming in near the lows.
Otherwise, the sellers are like going to just simply wear them down and then drift it all the way to New York lows, and they have to rebuild the price action again.
Just looking for any clues.
Right.
Nothing spectacular yet. Nothing yet. You'll see it. When it happens, you'll see it. You'll be like, oh, right there. Nothing yet. Come on. Show me something. I can feel it. I can feel it about to occur. Any second now. Something big happened. There's a big chunk of sellers. Sellers are coming in really aggressive. I think they're going to break it. But let's see if they actually do. If they don't break it, this might be a good chance to go in long because we could trap those sellers. But it looks like they are actually trading a little bit below. Still not. They're still just trading within that area that nothing's actually been broken. If we get above those sellers and post big volume, that could be it.
Which
really
which
getting
squeezed. Like above where?
These
above,
1,
above
2,
those
1.
Guys?
We're just yeah.
Well, there you go.
Now you see there's 50 in there. That's not terrible. All right, I'm gonna go long again. If we get below here, then I think let's just add a stop real quick. I need to make the footprint a little bit bigger so I can actually see it. Now, really, I don't want those sellers to, I want to squeeze these sellers out, right? So we want buyers to keep coming in heavy above these sellers and squeeze them out and take their stops, essentially. And once it does, you get this boom, you get this pop. You know, these kind of sudden pops up. We still haven't squeezed them out yet.
No, they can't take out the highs of that candle.
Got in a little bit early, but it's fine. Because even though sellers are posting a lot of volume, they're struggling to break this area here. So they got to post even more volume down these lows in order to break it. Buyers just need to post volume up around here where we are now to really pop it up. So the probability is a little bit more in the favor of the buyers right now. There's a bit more volume. See, the moment they posted a little bit more, we're getting a tiny bit of a pop, but we just need to keep that momentum up and then we can actually take out all the stops. And I think it's about...
We're at 500, that 500 level. London low is 504. So this is the level. Like we take out the 500, we're going to run 510s, 511s. That's the 504 London high, London low. That's the battle right now. That's the battle
100%,
right now.
Yeah. Let's get the potential exit button ready. Sorry about having to like halve the screen here. I know it's not ideal, but there's no other way.
We know exactly where you are.
Yeah. Like obviously in real life, I have two separate screens where I have these separate things, but for the stream, there's no way of showing two screens annoyingly. I don't think so.
For sure. We totally know where you are.
Makes it a little bit more difficult just to squeeze everything in one little snippet. See, I'm seeing buyers get absorbed again at the top here. We could get another little rotation down, which is very annoying.
Pushing them back off that 500 level. They need to close through that level, and they're not able to. The sellers are swamping them.
They keep kind of failing at the top here. But the important thing is we don't get below this 121. If we can stay above it, we still have a chance to squeeze these sellers out.
Yeah.
So we don't want to release these sellers, and it's getting close to it now. Come on. If buyers can keep defending this, we can still go for another rotation up, but it's basically a sideways market. We're just consolidating, essentially.
Yeah.
And what is consolidation? Ultimately, it's just a build-up, right? It's accumulation. Orders getting built up. These sellers are coming in again at the bottom. They're trying for another push. I think they might just take it. Look at that, 45 orders. We almost got them out, but I think the sellers might just take it here. Look at that. They're posting 80, 70. They've got it, I think.
Yeah.
That's a shame. We almost had it at the top there. We could have had it, but
it's close.
It is what it is.
It just didn't hold. I mean,
it just didn't. Yeah.
From on my trades,
around that.
Right. On my signals, I did not have a signal because it just didn't hold. Because I'm always trading on the candle close, on the hold, and it just didn't hold those levels. By the way, gold is popping. I'm just on the male side. Speaking of gold, guys, let me just sort of show you a couple of things that I made specially for Ola. Let me see if I can do this. Wait, let me remove screen.
Oops.
Can I only share one screen? I guess I can share only one
I
screen.
think you can only share one screen.
Yeah. Remove. Let me remove this. Oh, hold on.
It's annoying. They should figure out a way of showing multiple
It's so
screens.
annoying, right? Remove and then present. Wait, stop screen. Add to stage, stop screen. I can't do anymore. Share screen. Okay, I want to share the screen window. This one. Okay. So what I want to share with you guys, this is the prop trader Ola Edge MT5 CFD tool that I made, which is obviously awesome. And all of it is available on totally free for anybody who gets the Hola Prime account. And by the way, Sam, I think you guys are running some really good deals now, like this.
Oh, yeah.
Can you tell us a little bit about some of the deals you guys are running?
So, are you talking futures or the whole, like everything?
I think everything, like, both on the CFDs and props, you guys are running some really cool stuff.
So we've actually just released a new CFD account. It's limited time only. It's called Hola Prime Boost. And you get up to 500x leverage on this account. So the whole point of this account is for traders who are, who want speed. You can pass your challenge in one day. It's a fantastic account, and it's selling like hotcakes right now. People are loving it. It's designed more for, I would say, more serious traders.
Right.
But it is great. You can really add size in an account like that.
So here's the perfect tool for that account, which comes in totally free. First of all, you see in my tool, you can do stops and presets totally just like in futures, just basically pre-built stops and presets that are right then and there. But the real value of this tool is partial exits. But here's where it really blows people away. If you go into properties, you guys can't see the properties tag here, but if you go into properties, you could actually set it to be automatically partial exits. So in other words, imagine you're trading gold right now, right? And you're long over here, and you're in 500 to 1. Give me 1 day to fund the account. You could literally have it take, and let's say the target is $4 on gold, $4 ultimate target. You can have it take a partial exit at $1, partial exit at $2, partial exit at $3, partial exit at $4, all automatically. Literally, you don't do anything. The robot does everything for you. You could have it set to every time it takes an exit to stop us at break even, or the stop is at the original stop, wherever you want it. Gives you the full modification. Once you basically enter a trade and have it automatically partial exit, you have the robot control the risk for you. Now, in a huge lever account where you get this big, move like this, like you have in gold, this is the easiest way to get funded in Ola, because you're essentially not having to constantly point and click and get out of the position, and you're scaling out at every single thing. And you can set those things at a quarter size, at a third size, at a half size, meaning, if you want half the position, like if it goes $2 up, then you sell half the position. You can do it any kind of ratio you want. It's all configurable in the back end. So the most important part is it's all totally free. It's all available on proptraderedgetools.com, which let me just sort of get off the, I'm going to put a new screen on here for you guys to show you. Oh, hang on a second. Sorry. So
I got to say, Boris, that tool is such a game changer for anyone who uses MT5. Like, if you're not using that tool,
right,
genuinely such a game changer. Honestly, you built a fantastic tool there.
So much easier than just simply hanging. And proptraderedgetools.com, just simply go there. You don't have to do anything. You literally just go there. If you already have an Ola account, just show them evidence, just take a screenshot, and it will automatically let you download it. If you don't, just simply go to Hola Prime right off that account, buy it, take a screenshot, come back, and download it. You don't have to email me. You don't have to do anything. It's all there automated for you. And it's super, super easy to use. And the most important part is this whole thing comes with a guide of how to use it, both video guide and all of the written guides. So what every single button does. Plus, there's also hot buttons. So you hit the S button, that's a sell. You hit the B button, that's a buy. You hit the R, that's a stop and reverse. Stop and reverse is like one of the best things you can do if you're wrong in the market, right? All of that, just single button clicks that are all there. You hit the X button, the whole trade goes off the chart. You know how hard it is to, like, you have multiple positions in MT5 and you got to single click all of them to get out of the way. This, just simply press the X button, all of them get out of the way. So, like I said, this is a tool I made for what I asked Claude, what do most professional traders want? And he gave me the answer for every single feature set that they want, and we put every single feature set into it. So it's super easy. One other thing, by the way, I totally forgot, is not only does this tool give you the execution stuff, but just like in the futures platforms, which doesn't happen on MT5 platforms, it will tell you whatever account you have. You tell them what account you have, or you can configure it yourself. How where your P&L is. Like, it will know the rules of Hola and kind of tell you, you're $500 above buffer, or you're like only $500 away from being stopped out. It tells you it's attached to the tool. It's a rule guardian thing. So there's actually two things in there, both a execution tool and a risk control buffer tool that comes in there, and it's all in the dashboard.
That's awesome.
So hopefully you find it very useful. Everybody, please go ahead. Get some Holas. Hola is just a great product. And now I think the coolest thing, it's been very hard, I think, to find. I think it's almost impossible to find a CFD broker, CFD prop firm that gives you a one and done. Like you can get past in one day.
This is honestly, I haven't seen anyone else do it.
Exactly.
I mean, that's why it's limited only right now, because the reality is, this is a very new product in like the prop space, I would say, for the CFD side.
Yeah.
And if
this is only something you see in futures,
people like it.
Exactly. It's only something you see in futures, and the fact that it's now a prop, and now the tool itself is futures like. It's very. You can literally preset stops and targets, and boom, boom, boom. You are trading like a futures trader within a CFD setting. So all of it makes it just much easier for you guys. Enjoy it. I made it free for you. Just get a Hola account. There's zero limit. Doesn't matter what account you get. But obviously, this new account is the one that I would get, because that gives you so much power. And you can, the moment you get quickly funded. Remember, the other great thing about Hola is you get funded quickly. They pay, and then you start making money. They pay out like within hours. Like
1 hour, yeah.
1 hour.
And
so it really, sorry, go ahead.
This tool, I've seen tools with less features being marketed for like literally being sold. It's crazy that you're giving it away for free.
If you go to mt5.com, there are plenty of guys that are selling this for $200-300, a pop. Yeah. Because and less sophistication than this has, because I've really put it. There's trailing stops in there. There's huge. You see the documentation. Documentation is huge. If you really want to configure it to your heart's content, you can. But if you just want a simple buy, stop, manage my partial exits, not keep it simple, stupid trades, boom, you're there. You're good to go. Anyways, guys, so much fun. I want to thank Sam again for coming and hanging out with us today. As always, we're going to trade a little bit of Hola tonight in gold. So come join us 7 to 8. We're going to showcase a lot of these things. I'm going to showcase a lot of the stuff on MT5 today on the gold trade. And again, I want to thank Sam for coming in and hanging out with us. He is a true.
Thank you, Boris.
Really interesting to see a footprint in the same kind of confluence as our trades come in and make a thing. By the way, we're finally popping now. I'm just going to tell you, we're finally showing.
Oh yeah,
a little bit of a move, which is always the case, right? That's the thing. If you can't get you have to give it several tries to get that move. That's the whole thing about scalping.
Oh, 100%.
Scalping is all about giving yourself multiple opportunities to succeed. Never get dejected over 1 or 2 trades. But we had a great day today, which we actually had 8 in a row consecutive winning scalps in Hola earlier today on the future side, which is awesome. We made a couple of really good positional trades, and we're going to keep doing that. I love it, and we'll have Sam back on again in the fall when when the markets hopefully give us something else.
Oh, absolutely. Yeah, I'm always happy to come on. It's always a pleasure with you, Boris, and everyone in the chat. So
Great.
yeah,
So
been a pleasure.
thank you very much, Sam. Thank you, guys, and I'll see everybody tonight. We'll see everybody later. Take
Awesome.
care. Bye bye.
Thank you, Boris.
Bye
Thank
bye.
you.